You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
Welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever scintillating Options Insider Radio Network. 13 programs on the network. Where can you find all of that fun goodness, including well over 400 archived hours of this program, the Option Block? Well, of course, the mothership, the flagship, theoptionsinsider.com. Surf on over there, click on the Insider Radio Network tab, and bam, you're off to the races. You can download, stream till your heart's content. And then, of course, if you're listening via some other platforms, iTunes, TuneIn, Stitcher, I don't care where you're coming from, we welcome you here on the old program as well, including all of you out there downloading and streaming via the mobile app. We love you guys, too. So all of you are welcome. We don't care how you listen, as long as you listen. Even those of you grabbing the RSS feed, the techies among you, and plugging it into whatever podcatcher or whatever RSS feed reader you like, we welcome you guys as well. We're a very accommodating program here on the old Option Block. And joining me on this program today, starting off with the man blowing up half of the Northeast. You know him, you love him as the Rock Lobster himself. Very appropriate nickname today, Mr. Andrew Giovinazzi. Mr. Rock Lobster, welcome back to the program, and tell us, why are you blasting up the great state of Maine?
Blasting. We're filling the hole back in. We blasted a hole in Iraq to build a house, and now we're putting dirt back in the hole. We're landscaping. That's all we're doing. Just landscaping.
That's what you call it up there.
My office shake like a, I wish I had Sebastian's whip right now, but it's shaking pretty hard. That's all I get. Well, it was anyway.
Probably a good thing for us and for our censors that you don't.
Yes.
The iTunes folks probably would not smile upon that. We would lose our family-friendly tag.
No more G rating.
Because we want the kiddies listening to learn how to put on their options and unusual activity. It's good for them. Start them off, parents, at least in second grade, maybe first grade, and they'll thank you for it down the road. All right. And also joining us, also with big news, slinging boat accoutrement out there. You know him, you love him, as Uncle Mike Tusaw from RCM Wealth Advisors. He is indeed Mr. Mike Tusaw. Uncle Mike, welcome back to the program, and tell us what's going on in your fantasy land of boats known as St. Charles.
My fantasy land of boats. Well, I just got a great deal on a boat lift today, and so I don't know if anyone's ever tried to find a boat lift before, but sometimes it can be a daunting task, but nonetheless, I found a great deal today, so I was excited.
Where does one buy a boat lift?
They're all over the place, actually, but I found a deal online from a dealer in Lakemore, Illinois.
Well, there you go, listeners. If you too are in the market for a boat lift, then by all means, head on over to scenic and lovely Lakemore. Very appropriate name as well. And maybe you too can get the Uncle Mike deal. Meanwhile, it's time for us to get away from boats and get into the markets, because it's time to dive right into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, and welcome to the Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking, what's catching our eye out there in the old marketplace today, and we seem to be in rally ho mode yet again today, thanks in no small part to our friends of Euro fame, aka the Greeks. We are recording this for listeners, for all you playing the home game on Monday, June 22nd. So bear that in mind as you're following along with the old program. And again, the Euro love is in full effect back on the street. Most of the major indices up well over half a percentage point. The S&P up 0.6 of a percentage point today, hovering right around 21.22 or so, right around 21.22, 21.23. The Dow also up about 0.6 of a percentage point, hovering around 18.111, actually 18.117, and the NASDAQ up about 0.75 of a percentage point or so. And on the downside, the dark side, the old vol products, in particular the VIX cash, taking a wee bit down today to the tune of about 1.3 handles to 12.65. So we're back down in that low teen region. Everyone who's been out there, particularly over the past week, a very heavy volume week last week for VIX options, and the lion's share of that activity coming in some aggressive upside call buying and 1x2 buying and vertical buying, and all those folks still probably not happy campers as this the VIX cash continues to drift ever so slightly to the south. Since we're in VIX cash land, perhaps we'll start with you, Mr. Rock Lobster. Amongst all the myriad things lighting up the old tape today, what in particular caught your eye?
The annoying habit of the Greeks to, I thought this was going to happen next week, the ball getting crushed. So I didn't reload as much as the short ball stuff that I wanted. But they keep having this deal, and then they make a little headway, and then they say, oh, no, we're not going to do it. But apparently the Cyprus guy is starting to cave a little bit, or whatever he's saying about pensions, reducing the pension costs, whatever to make the Euro masters happy. But it was enough to take the volatility into the 12 handle. So, I mean, there's still some pretty decent volatility on the European indices, but I mean, here a 1277 VIX is, that's just good times are happening again in that product as far as that's concerned. So, I mean, it's a pretty bullish overall once the ball gets that cheap. That's all I'm going to say. Pretty darn bullish.
See, you're subscribing to the contrarian VIX view. VIX is cheap. With time for some movement out there. We discussed that on vol views last week as well, of course. The propensity for call action out there in VIX land, it's always call heavy these days, far more than usual, pushing that 4-to-1 calls over puts ratio, which is when people who watch those things, and there are quite a few of them, tend to start waving their hands in the air and saying, oh no, the sky is falling, or perhaps the sky is poised to fall very soon. And again, what we're seeing so far, at least today, not exactly coming to pass right now. But speaking of things that are coming to pass, we turn our attention now over to that tropical paradise known as St. Charles, where they are fixated with many things, amongst them Apple and indeed gold, and two areas that were actually moving a little bit today. Apple kind of moving in lockstep with the market, up about 0.75 of a percentage point or so, just south of a handle. But the other big two-saw obsession, abstraction, love, call it what you will, gold, taking it a bit on the chin today, I think as a result of perhaps the easing of tensions over there in Europe, selling off. I think one point was off about 1.5%, closing the day down about 1.3 percentage points or so, or over about 1.5 handles or so on the day. So not a great day for gold. Uncle Mike, take us through the day that was, Uncle Mike Tusaw, from a trading perspective today.
The day that was. Okay, well, might as well look at Apple a little bit. Apple is up kind of a little bit more than the marketplace. I think 130 is a pretty key number with Apple. If it can break through there, then maybe maybe we have a shot at the $1 trillion market cap, but I think it's going to have a hard time getting through the 130 mark for now. Going down the list, gold, it did pull back a little bit today. Not a huge down day by any means. It had a pretty decent week last week, but I would agree that just kind of the news that's coming out in Europe would contribute to that for the time being. Once a deal is done and we get some type of certainty, if we ever do get some type of inflation going in this economy again, which we might, I could see gold coming up again over the long haul, as I've said at least 6 million times on this show. Going down the list, definitely in terms of the VIX, it's getting low again. Just to kind of add to what Andrew had said, low of the year on the the 52-week low on the VIX is just a little bit over 10, so it could go lower. I'd be curious to see if we could see single-digit VIX over the course of the next few months if we do get a deal out of Greece, and it actually does happen. Reason I say that is because of the fact that shifting to the next two items with which I will discuss, the S&P and bonds, the market demonstrated risk on today by all means. After the news came out, bonds are getting crushed, the prices of them. And I think that if this continues to happen, money's going to have to go somewhere. And so when money comes out of bonds, a lot of times it does go into stocks. And with that happening, a couple of key things do need to happen in stocks. Right now in the SPX, the all-time high is 2134. We're at 2122 right now, 12 points off the all-time high. We could easily pass through that tomorrow with very little problem. However, as I've always said on this show, that is a key number. We actually do need to make the all-time highs before they can continue to race to the upside. With that, though, TLT, this is one example, was off 2% on the day. And so I think that when you have movement like that, it could be an indication that people are looking to take on some more risk, and that risk would be in the stock marketplace. So with all that being said, bottom line, I'm starting to get bullish again. Oh, wait, I already was.
I was going to say, that's just a regular Monday for you, sir, out here on the marketplace. Uncle Mike is bullish. It must be Monday or Tuesday, Wednesday, Thursday, or indeed Friday, or perhaps even the weekend. I don't think that bullishness really dies away with you too often, Uncle Mike. So good to see that all your concerns are aside. And it's not a bad point you raise about single-digit VIX. We have pontificated on that on this program and some others here, including Vol Views on the network. What would it take to get us down there? I think someone wrote in with a great listener question a few months back on that program about what would it take to really have I think a 5 handle or even like a 1 handle in VIX, and what would have to occur in the marketplace to make all of that come to pass.
Never.
Yes, exactly. I don't think we're anywhere close to that, but I don't know, not a bad question. What do you think, Mr. Rock Lobster, about our possibility of perhaps as we get into the height of the summer doldrums, Greece is behind us, not a heck of a lot earnings. The next earnings season still a bit farther on the horizon. Not a heck of a lot else really on the horizon. If this Greece thing does indeed get behind us in some systemic way, do you think we could flirt with the 9 handle?
We could flirt with the 9 handle if all this kind of comes to pass. Definitely flirt with a 9 handle. Like 8 though, or 7 or anything like that is just not. Just the way the product's set up, and just nobody's going to sell the volatility that cheap. Because it would get that cheap, people would buy it and just hold on to it, and wait 2 weeks, and then you make your money. So it would never. I don't think it would ever get that low. I just, as an index trader, 25 years of watching it, I know it. When it gets super low, you can almost hear the screaming of the liquidity providers in the SIBO back in the old days, because that low vol made everybody real quiet. Yes,
people tend to take their ball and just not play.
We have positions kind of set up where, if we have a Greek surprise, that's one thing. If it doesn't happen, but we are planning for a run down to much lower levels of the vol products from here. Simple answer.
Yeah, it certainly seems like we could indeed flirt with those low levels. I think much more of a flirtation than a marriage. I don't think we'll be hanging out there for the rest of the year by any means, but we could have certainly in the July, August timeframe, and things really, really tend to wind down a bit, and all of Europe, all the French SPX customers go on vacation. We could certainly see some of that vol drift down into the single digits for a little while. Moving on to some other things that are catching people's eyes today. A lot of stuff lighten it up, including some people, a lot of outlets, including CNBC and others, have been banging the drum saying, hey, what the heck's cooking out there in Hilton? The thing's just lighting it up of late, and it's doing some more volume again today. It's, of course, Hilton Worldwide Holdings, Inc. This is ticker symbol HLT, trading today right around $28. Does about 5,000 contracts a day of late, which is in and of itself inflated, doing about 12,000 today. So pretty pretty robust paper out there in Hilton land. Looking right now, including like a 4,000 lot of the AUG 31 calls, 3 handle out of the money calls. Paper gobbling up most of those. So call love is the trade du jour out there in Hilton. Apparently, good time to be in the hotel business. Looks like they also put on a put spread to the downside, a very tight one. 28.27 out. It went up mid-markets. I haven't had a chance to parse to see what they're up to, but obviously August, no OI, because we're just starting out there in AUG land for Hilton. So all new opening paper. Interesting. We'll keep an eye on this one out there in the Hilton land as folks are apparently loving them. some Hilton brands, some other names that are moving quite a bit, and you guys have probably seen them making some headlines today. There's we talk a lot about names like GoPro. They're sexy, hot names, but their suppliers are also sometimes adversely affected by the news, including apparently this supplier to GoPro. Company's name is Amberella, ticker symbol AMBA, taking it on the chin today off 25 handles or nearly 21%, closing at 94, right around 94.5, actually 94.30 on the day. This is the name that does about 14,000 contracts a day, doing 123,000. Just lighten it up. Looks like the lion's share of this coming off some shorts, some beers out here, really putting out some scathing news on this name that is not, obviously, things are not looking too rosy for this name. Mr. Rock Lobster, this one come up at all in your pit report? One of the few shining stars today, or I should say in your pit chat, one of the few shining stars today from a volume perspective out here today.
As far as unusual activity, there was a lot of activity. I couldn't find anything that just stood out. It was like, okay, I'm going to buy calls. I'm going to buy puts. It was just all.
Yeah, the Amberella one was
tons of everything.
Yeah, it pretty much see a strike and trade it. Hilton seemed very much more upside call love as we were wont to see in a lot of those names, doing about 12,000 contracts today. But you're right, the Amberella was just every strike, particularly in the weeklies, which is what you're going to see when you see a name moving this aggressively in one direction. Surprisingly, though, 1-to-1 calls versus puts. Clearly, there are people selling calls on the bid out there. There are people not just lifting offers on puts. But it is. You usually would see more bearish leaning paper in a name that's selling off 21%. And yet it seems to be perhaps some folks piling in towards the end of the day and saying, yeah, maybe this is a bit overdone. About nearly 12,000, 13,000 calls lifting offers out there throughout the day today. So maybe perhaps there's something to be said for that, about 20% of the overall volume. And 11% of people hitting bids on puts out there. So interesting stuff cooking out there in Amberella. And since we're talking unusual activity anyway, let's just dive right into it. Let's get into it. It's time to dive right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
And welcome to the Odd Block. This is indeed the portion of the program where we break down what's moving, what's shaking on the wilder, the shadier, the more dubious side of the options market today. We're going to kick things off actually with a little bit more reputable name than we sometimes start off with here in the Odd Block. Not some cheapy $2 biotech, no. This is the name some of you may have actually heard of. It's called Ford. They make a few cars, I believe. Of course, ticker symbol F. Closing today, $15 and some change. This is the name that does about 50-odd thousand contracts a day, doing 175,000 today. So lots of love out there in Ford from an options perspective, well over 3x. And what we saw today was actually not so much love for the underlying as it was closing out a trade that seems to have gone fairly well in their favor. In particular, we saw some put buy-in for some decent size. It was the July 14 puts that really caught our eye. First off, with one block going up on the Philly for 3,217 of those July 14 puts, paper buy-in for a whole nickel. So buying those boys back as the day went on, about 17,000 and change went up on that strike. There's only 14,000 open, so clearly a few opening contracts in there as well, but it seems like the lion's share of that paper was indeed closing. A friend of ours perhaps coming in, having blasted out some puts, and now seeing them at a nickel, decided it's time to take those off. Can't really argue with that. We've advocated for that many times here on the program in the past. If you do have a right that goes in your favor, gets down in that sub-dime range, then what are you doing? Just take it off. Don't play around with these things. And that seems to be what our friend out here was up to today. Mr. Rock Lobster, is that your belief as well? Do you concur? Or are you going to swing in, go for the fences, saying this is pure open and paper? Where do you stand, sir?
I have to say, it sure feels like somebody's closing. There was open interest. There's like 50,000 contracts on 3 strikes. It seems like somebody said, okay, I'm going to sell these. I'm going to sell these. I'm going to sell these. And then today it looks like they're buying them back. Now, there was huge volume on the 6th strike, but that was looked like a combination for a risk reversal, or not a risk reversal, but a reversal conversion type stock replacement. But this put buying just looked like somebody's made a bunch of money on these puts, and they're taking it and going. They're taking the Greek rally.
Yeah, I like that 50,000 lot on the 6th strike. I didn't even bring that up, but yeah, that's
all.
Those July 6 puts, baby. That's good business right there. Add a penny. Yeah, of course, clearly doing looks like a stock replacement, or perhaps a box. I don't see the other parts of that, so it looks like just a straight up conversion reversal. Also, like Andrew mentioned, there was just kind of a flurry of put buying across the board here in Ford. We mentioned the July 14s as being the big dog today, but we also saw about 7,600 of the July 13 puts going up, preponderance of paper buy-in, 24,000 contracts open, so clearly there's more open there, as well as about 5,000 of the July 15 puts, and some open in paper on the July 13 half puts, about 8,000 going up there. So perhaps there clearly is some opening paper stuck in there as well amongst the close, but at least the lion's share of what caught our eye initially out here at Ford looks to be closing paper. So keep an eye on that one. Right in with your own ideas. We've talked about Ford a few times on the show in the past, not just here, but in the trading block and others. It's an interesting name, kind of been a fun one to watch of late to see if they can break out of this kind of range they've been in for a while, the 15 to 16 roughly range, or maybe 14 to 16 range, to see if the Ford can break out to the upside, or perhaps if some of this opening paper is indeed opening on the puts, then perhaps breaking out to the downside. We shall see how Ford fares as we move on to our next name, our next victim here on the odd block. This is a frequent offender, a frequent visitor, a frequent guest star, call them what you will, on the old odd block today. This is Owens Corning, ticker symbol OC. You may be familiar with them. They make a lot of the glass for a lot of the cool smartphones in your products, as well as pretty much a lot of other weird composite stuff for a variety of different infrastructure. And this is the name, of course, ticker symbol OC today, trading right around 41.5 today, up about $1.40 today, or about 3.5%. So rally ho mode for good old Owens Corning. This is a name that does about 4,000 contracts a day, doing 22,000 and change today, about 55 to 1 calls over puts. That should give you some idea of where the love was out there in Owens Corning today. And in order to find all of that juicy paper, we have to scroll all the way down to the Feb expiration cycle. Let's see, I haven't talked Feb in a while, Andrew. So this is kind of new, particularly Feb 2016 here. And in particular, this is the Feb 2016 48 calls that were lighting it up today to the tune of some significant size, particularly for Owens Corning. Remember, I said this name's trading right around 41.5 right now. These are the 48 calls, so $6.50 out of the money. They started catching our eye this morning when one block went up on the ISE for 10,000 paper buying, well, probably buying. It went up pretty much right on the offer. So it looks like it's leaning high near the offer, I should say, not lifting offers. So leaning buying on these. We'll have to dig in tomorrow for the OI to make sure and dig in some of the paper a little bit more today to know for certain. But 98%, I would say, leaning towards the buy end of the spectrum. As the day went on, more volume flooded into the tune of about another 3,000. Total of 13,000 contracts and some change going up here on this strike today. So looking like a straight up call buy. Don't see any stock going up with this name. So it looks like this one is, as it appears to be on the surface, someone having some long-term upside love here for Owens Corning, thinking that that Gorilla Glass is really going to knock it out of the park with the iPhone 6F or 7 or whatever they have coming out this year. Mr. Rock Lobster, what's your take here on our friends having some love for some upside here in Owens Corning?
Yes, Owens Corning upside love. They are looking for just a real big move, and they're going out to February. So you need all-time highs for the thing, or at least highs in the last 2 years. It needs to break out to some pretty big levels. So it is a little bit of a head scratcher for me in that way. They might have had some stock against it. I wasn't quite sure. It went up on an exchange that normally doesn't cross the stock. I don't think I wrote that up in the notes because I wasn't sure. The delta is about right for it. But either that, they bought a lot more stock, or there's a lot more calls purchased afterwards. So, the stock is kind of, I think, a little afterthought. But just somebody wanting to get really, really long, at least how I see it. And wait.
Yeah, and they're patient. They're going to put it in their back pocket and wait till Feb and see how that moves. And you're right here. Looking at a chart of that name, that's a pretty aggressive level there for good old Owens Corning. We'll see how that comes to pass as we move on here into our final name, our final victim in the old odd block. This is Green Plains Inc., ticker symbol GPRE. The trading today right around 31 and some change, 31.17 to be precise. This is the name that does about 1,900 contracts a day, doing about 2x that today. So a decent little spike for a decent little name. In order to find our volume out here, we have to scroll out, not as far perhaps as our friend out there in Owens Corning, but decently far, all the way out to December. In particular, the DEES 40 calls were what caught our attention today. We saw 1,000 of them going up for $1.10 paper buying. They didn't go up in the one block we usually see with these. They went up in a bunch of small blocks on a variety of exchanges. There is some open interest on this strike, about 1,500 contracts or so. So it looks like, and it's pretty much the only strike anywhere nearby. You got to go down to the 35s to get about 2,800 open. And aside from that, there's nothing else open out here in December from any sort of substantial volume perspective. So there's a good chance, since it's going up on the same strike, that it could be closing. But again, this is why we call it the odd block. Why would you be closing a DEES contract right now? You got some substantial time until expiration, and you got a substantial way for these calls to go. We're trading 31 and some change. These are the DEES 40 calls. You need about 9 handles for this underlying to move, and you need to think to start threatening with some 1-year highs for these calls to really pay off. That said, maybe our friend here could be discovering that discretion is the better part of valor, maybe changing his outlook on this name. This is, if you're not familiar with them, they're not the coffee guys. No. That's Green Mountain. This is Green Plains. They're a vertically integrated producer, marketer, and distributor of ethanol. So our friend here, perhaps opening Mr. Rock Lobster, perhaps deciding to get the heck out of Dodge here in the upside in Green Plains, saying not as much gold in them that are ethanol hills as he perhaps thought. Where do you fall on this heated opening closing debate, sir?
Well, the stock did recover quite a bit from, it did not do very well in the oil. When oil prices crashed, everybody thought, who wants ethanol anymore? So this stock did really bad. It was in the mid 40s, traded down to about $22. So the only thing I could think of, there's some action on the July 35s. either somebody's rolling to December or they're putting on the spread because the D's is traded at a block of time and the July is traded at a block of time. But as far as these go, I don't, you really want to close the 40 calls for $1 when they're $9 out of the money? Unless it was maybe a naked short from a much higher level. If you're writing these, that would not make really any sense to me. So I can't. I don't see how. I don't see why you'd want to close them. But you're right. Maybe somebody does think that something is going to happen. That would be the only thing I could think of why you would want to close a short call that was $9 out.
Yeah, that's a weird one. I'm looking at the chart here, and this thing hasn't flirted with those levels since back in August of last year. It hit like the 44 level, but I'm guessing he didn't put this on back then. Probably a good bet. So yeah, it's really an odd reason. Hey, listeners, maybe you have some ideas right in with why you would want to close a D's contract this far out. Could have had a change of heart. We've seen crazier things. Either way, some weird paper going up here in good old Green Plains. Again, that's why we call it the odd block. And if that wasn't enough weirdness for you listeners, well, stay tuned. We got Uncle Mike coming up. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, and welcome to the strategy block. Yes, it's that time again. It's Monday. That means it's time for some options, wit, and or wisdom. We like to condense both of those things down into one segment that we call the strategy block. Is of course the time for Uncle Mike to don his smoking jacket, grab those stone tablets down from the wall, engraven with all sorts of great options, symbols, and of course, grab that bubble pipe and sit down by perhaps a nice roaring AC today instead of a roaring fire to dispense some options, wit, and or wisdom. Uncle Mike, we are all waiting with bated breath, sir. What do you have in store for us today?
Well, a couple things. It's St. Charles, Illinois, so we don't need air conditioning because we make our own weather.
It is always temperate and lovely there. I misspoke yet again. You have my humble apologies.
Oh, well, thank you. And then in terms of like the hat with the option symbols on it, I actually, true story, I do have a necktie with ticker symbols all over it. It was you have no idea the hit of the party I was at the Options Express Christmas party a few years back.
That must have been lovely.
Oh, it was something else.
See, Uncle Mike, you were never a floor guy. I have a back when they still required ties, they used to compete for who. Andrew, I'm sure you have a box of these somewhere as well. We used to compete for who can find the most hideous ties imaginable, and I had fans and family. I still have them somewhere. All sorts of horrible things with balloons and clowns and you name it that we would wear to the floor to attempt to distinguish ourselves and or just be obnoxious. And so I probably have a few that could rival yours, Uncle Mike.
Well, I thought mine was really nice, actually.
Oh, well, if you liked it, then there you go. I had nothing that I liked.
No, my wife won't let me wear it to any social gatherings or events. I can't possibly understand why, but nonetheless, it is what it is. So, anyway, the strategy block for today. Right now, we have had a rally in the marketplace. So oftentimes when newer traders get into rally mode, whether they're trading stocks or whether they're trading stock replacements like the diagonal spreads that we talk about a lot on this show, oftentimes the first move with which to kind of hedge yourself or maybe take some profits or reduce the deltas a little bit is to sell some calls. So for example, let's take a look at SPY right now. Let's say that we had a nice little rally, and because of the rally, we want to just take something off the table, maybe sell some premium or sell a call at when the market comes up. And the first thing that I'm just randomly pulling up right now will be SPY, the July week 1. So it's 10 days till expiration. SPY right now, it's trading at 211 or closed today at 211.89. And let's take a look at the 213 calls. Now, with those right now, they're trading at just a little over 90 cents. 93 cents would be the midpoint of what you could get filled on based on the closing prices of today on Monday, June 22nd. And so I personally don't like that trade. And the reason is that if we do make a new all-time high, or in one day, you've basically created a losing trade with 1 day worth of movement. Now, granted, I know it's the weeklies, and I know that it's kind of a situation with which to take with a grain of salt because there really isn't a lot of time until expiration. But I really believe that there is a good chance of the market moving more than 20 points over the course of the next 10 days. I think it's a pretty good chance personally. And the reason that I bring up that number is because of the fact that let's say the S&P moves 20 points, or if SPY moves $2, and let's just make it 21 points, so that puts us right at 214. If that's the case, then it's mathematically impossible for you to make money unless you wait for the market to come down, let's say. And the reason I bring that up is that you're getting 93 cents for this premium. And I'm assuming that you own the underlying too, just for sake of simplicity. You're getting 93 cents for this premium, but you have to hope and pray the SPY does not move up another 20 points. Because if that's the case, then you're in a losing trade. Now, granted, the market could go up, the market could come down, who knows? But that is a very realistic thing with which you can get into a loss right away. Instead, if you are that person right now that is feeling that, you know what, I might still be a little bit bullish, but I just want to take a little something off the table, and I want to maybe get some theta on my side, whether you own the underlying or whether you own a long call, what I would recommend considering is some type of a calendar put spread with similar negative deltas. So, for example, let's say that you are of the same sentiment with which I just mentioned. You could also buy, and I'm just making these up right now, I will actually be looking at all these very intently tomorrow if we get a little bit more of a rally. I'm not quite there yet, but if we get a little bit more of a rally, I will be looking at something along these lines. But let's go out to August. Right now for August, the 205 puts currently trading at 224 by 228. So let's just say that you can buy them for 225 just for sake of easy math. And let's go back to July week 1 and look at the same 205 puts. You can get 32 cents for them. Now, is that a great deal? Maybe, maybe not. It just kind of depends on what you're looking to do. But if you believe that the market is going to come down a little bit, or it might, but you still want to hold on to your bullish sentiment, a calendar spread is something with which to consider. Now, I haven't crunched all these exact numbers yet. It's not time for me to do that as of yet. I still need a little bit more of a rally in the marketplace before I go through this exercise. But this will be what I'm doing tomorrow. If we get a little bit more of a rally, I'll be going through to see what the best put spread would be. But what you can do with something like this is you can achieve time decay because of the fact that the near-term put option will decay at a faster rate than the longer-term put option. In theory, of course. You can also achieve some type of negative deltas. You're taking deltas off the table because it's an out-of-the-money calendar put spread. The other thing with which you can achieve is positive vega, meaning that if volatility increases, that's something that will, in theory, benefit a put calendar spread that's out of the money. So what I would encourage you to do is if you like to sell calls when we have rallies and it's on an underlying with which you already own, what I would encourage you to consider to add to the strategy repertoire would be to have some additional margin or have some additional cash on the sidelines, or even use this with margin depending on how well your broker gives you on how good of a deal your broker gives you on the margin rates. But use some additional capital to achieve something similar with a calendar spread that you would with a short call. Now, sometimes you may, instead of having to do a 1-by-1 calendar spread, let's say you want 100 shares, instead of having to do a 1-by-1, you may have to do a 2-by-2 or a 3-by-3, just depending on how you want to play with the deltas. But this is something with which to consider. I can tell you that there's nothing more frustrating than selling a covered call and having the stock run right through it. Now, granted, the realist in you should know that that's a good thing because of the fact that you're making the most money with which you possibly can. However, anyone who's traded a covered call before has experienced that frustration. Like Alex used to say on this show, everybody wants the premium, but no one necessarily wants to sell the stock. So I feel as a workaround, Another thing with which you can do is look to the put calendar spread in situations like this. And that is the strategy block for today.
Well done, as always, sir. Very informative, very educational, all sorts of good stuff. I enjoyed hitting on my own bubble pipe while you were talking there as well, just blowing some bubbles here in sunny Florida before I head back to the old Options Insider HQ in Chicago. And speaking of heading back to things, it's time for you guys to head back on to the all-star panel. It's time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the program where you guys take the reins and fire away with your questions, your comments, your insights, your innuendo for us to share here with your fellow listeners. First up on the docket, we have Kevin D. He writes in, "Hi, Mark. I love your shows." Well, thank you, Kevin. We love making them. We love having you guys listen. He goes on to write, "My question, what happens to my options if the underlying gets halted permanently? Would I ever be able to close them? I'm remembering Sino Forest from a few years ago in Canada. The stock got halted pending a fraud investigation and never came back. I'm worried that I won't be able to cash in on my BABA puts. Thanks, Kevin." Well, this is an interesting question, actually. We touched on this a while back on the show. I think about a year ago, we had a bunch of people writing in with questions about what happens, if you can't do stuff with your stock is frozen or whatever. But this kind of vague scenario here is a little bit of a different story. You're halted, and then you're kind of just waiting. You're waiting. What happens? What's going to happen with my underlying? Will it open? When will it open? When will it open up again? And we all know we're options traders here. We all know every tick of the calendar is a little bit of a death to a long premium position or potentially a winner to a short premium position. But in this scenario where the underlying is halted, you don't really have a lot of information. This is a rough one, Kevin, and I kind of feel for you if you are in this, but I think he's not yet. He's worried. He's joking he won't be able to cash in on his BABA put, so I'm guessing he's not there yet. But it's an interesting scenario, and pretty much everyone knows when the stock is halted, of course, the options are halted. But you do have, particularly if you're a premium buyer, you do have that little extra ace up your sleeve here in this type of scenario. And that, remember, you do have the power to exercise still. So if your halt extends through the period of expiration, you still have the power to exercise those puts or calls. Or, of course, if you're short, those may be coming back to haunt you a little bit. People could be exercising calls and puts. Now, the problem with that, of course, is that you have no idea where the stock is or where the stock will be opening whenever it reopens. So it's kind of a bit of a guessing game. Some people in that scenario may opt to just say, well, these calls would have been worth some money, but I don't want to exercise them because I don't want to be stuck holding these deltas in case this thing does tank. Or maybe you decide to exercise some puts. You think this thing's going to go to zero. And then once it's reopened a few weeks or a few months later, you find out it wasn't as bad as they thought. The investigation was cleared up, whatever the case may be. And so now you're finding yourself short and the thing's rally ho mode. So it is a difficult scenario for you guys to do, but it is at least somewhat reassuring for you guys out there on the long premium side of the fence that you do have that extra option, pun intended, when these things are halted. Yeah. Now, of course, Andrew brings up a good point. I'll let you run with it, Andrew. A little bit of a different story if it actually gets delisted. He's kind of saying more if you're in that limbo mode. Have you ever been stuck in that limbo mode, Mr. Rock Lobster?
I've seen stocks stuck in the limbo mode where then the OCC eventually makes a determination on, because they have to do a closing rotation for the options. So the OCC has to make a determination on, what is going to happen. So you have to go to them when they finally say, okay, is the company going to be delisted? And if they are, what's the, with zero as the price, they have to make that determination. So that's the only other thing sometimes it's like, because with a few of these Chinese companies a couple of years ago, They were doing some sort of financial shenanigans. And, they're like, okay, we're just not going to post any financial results. Well, U.S. equity markets don't like not posting any financial results. So the stocks went in limbo, even though there was the companies were still alive. They just weren't quite compliant. So it could be that could be a problem if that happens, because then if it gets delisted, then everything goes to zero essentially. So not a great turn of events.
Yeah, not a good turn of events. Luckily, I don't think Baba's there yet. I think we got a ways to go with Baba before you're worried about the halted. But yeah, if you're in that kind of intermediary phase where they halt you and you're still waiting and it rolls through expiration before things have gotten serious enough for OCC to make a determination, you're kind of twisting in the wind a little bit. And that's when you kind of have to rely on your own recognizance there to say, do I want to exercise these, or do I kind of want to just wash my hands of this and walk away? And that can be painful too. If you have calls or puts that are in the money or should be, then to walk away from that money on the table is a challenging thing. Uncle Mike, you ever have any experience with this, or you've been fortunate enough to avoid kind of living in limbo like this?
Very fortunate on this one to never have to deal with this. I've had some things with clients that have been kind of a mess along these lines, but Andrew's right. It's kind of what the OC. You're at the mercy of the OCC, which it's a good thing because every situation's different. But I've thankfully never had to experience this with my own money or any money with which I've been managing. But you have to be ready for something that happens if this is to be. And once again, you do have the right to exercise, so that's a good thing. But do you have the money to exercise? You got to be prepared for it.
Yeah, in this case, you have a little bit more options, pun intended, than the underlying holders. You have one more arrow in your quiver, so that's at least a nice thing. But still, it's still not a desirable outcome for anybody. All right, moving on.
Let me bring something else up just to add to that.
Go ahead.
You guys were on the floor, and when 9/11 happened, tell me a little bit about that? What did you guys do when they halted trading for those few days? Like, how are you positioning yourselves besides hoping and praying you weren't long too many deltas?
I was in a very fortunate position. Andrew may hate me for saying this, but I was just transitioning kind of from the floor to upstairs at that point. So I had a big position in Intel, and I had pretty much just liquidated the whole thing about a month or so before. So I had really nothing on. I was kind of in that unique scenario where I didn't come in and say, oh my God, I have to chase this stuff going through expiration for weeks and or months. So yeah, I was one of the fortunate few. I know a lot of guys who really, really got taken to the woodshed by that. Mr. Rock Lobster, where were you at that time? Were you at the P Coast? Where were you hanging your head that day?
I was on the P Coast. I was working for Group 1 at the time. Actually, it was just right before I was about to leave. And what happened was, I believe it was like a 5-day close, or it was a 4-day close. Your options were worth X dollars, and they decayed like 6 straight days. So for everybody that was long premium, you got crushed because all your options had decayed for 6 straight days. The only thing that saved some guys is they opened the volatility up really high. And I remember that day because, okay, it's 9/11, the buildings, what's going to happen, all this stuff that everybody just forgets what total mayhem that was. We don't go to the political rabbit hole, but there was a lot of uncertainty at the time. Nobody quite knew what was going on. But anyway, the volatility opened up quite a bit. I think the VIX opened up about 20 points higher, something like that. And immediately, we were lowering volatility as fast as we could have to do, because it was clear like that opening was kind of the bottom. So volatility came in, volatility rose, which helped, but there wasn't really a whole lot of liquidity at the time. So you had basically 6 straight days of decay, and I think my theta then was probably about $2,500 maybe at the time, negative. So it cost me about ended up being about $15,000 or $18,000 in decay. But then we had the vol went up, so then I made money back, right, from what I thought I was going to lose. And then the vol came ripping down again, so I ended up losing it anyway. So just what you got to remember is just options kind of decay every day on theta's at daily cost. And depending on the position, some people were big winners and some people were losers. Those Iron Condor people were like, woohoo, 6 days of no decay. I mean, they had the big move in gamma, but there was so much decay that it really didn't matter.
Yeah, that's kind of those are those trading moments where you kind of realize that you're little more than the gnat on the tail of the dog that is whacking. I mean, you're just at the whim of events far beyond your control. You kind of have to just batten down and see how it goes. And you're right, Andrew. There's not much really of anything you can do in that scenario. I know it rolled through expiration. I knew a lot of guys who had hedges in the index and others that were kind of going away, and all of a sudden they were finding themselves, through expiration. Usually you'd be able to do your rolls and adjustments, couldn't do anything. So they had just had naked short deltas left and right, or long, or whatever the case may be. It was just a cluster F of epic proportions. And I was very fortunate to have been on the sidelines. It was just a random fortuitous event. I think if I did decent risk management in my intel positions, but at the time, no one could have foreseen what would have happened, how far you would have moved, no hedging to be done, nothing to be done. It really was a scenario that tested even guys with good risk management, even guys who had taken things off, they had planned well going into expiration. No one planned to go through expiration. Everyone thought you'd have some time between now and expiration to get something done. And that's why we say, listeners, when we say take things off going into expiration, we this is not stuff that we just make up out of thin air. We've seen this happen in some horrible scenarios, and so we're trying to
learn the hard way.
Yeah, Leah, don't learn the hard way. We've already learned the hard way. Let us feel the pain for you. Just laugh at our pain now and enjoy it. That's what this show is all about, laughing at our pain. So it's therapeutic for you at least. But either way, yeah, interesting stuff. That's a good question, Uncle Mike, and it's kind of one I haven't thought about in a while because those days were so crazy and just so hectic that they're kind of hopefully we'll never see that's like again. You never know for sure, but crazy stuff. Good question there as well from Kevin. Great stuff. We know you guys love to bring your A game here on the network, and we love when you guys bring great questions. Well, we pontificated on that one for quite a while, so we don't have any time for any others, unfortunately, but we'll squeeze in a few more on the Thursday show. Meanwhile, it's time for us to roll on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, and welcome to Around the Block. This is indeed the portion of the program where we break down what we're keeping an eye on for the rest of this week. Surprise, surprise, there still are a few little earnings trickling in here. We got those of you still looking at the fortunes of this once high-flying tech titan, this BlackBerry. They have earnings again tomorrow before the open on the 23rd, so hopefully you've positioned ahead of it if you are indeed so inclined. Not a lot of love for BlackBerry out there anymore these days. Stock's trading right around $9, up about 30 cents today, so it broke through the 9 handle again today. It's the name that does about 33,000 contracts a day. Doing about 81,000 today, so a decent day for BlackBerry. About 2.5 calls over put, so perhaps there is some love lurking out there in those BlackBerry hills for this name, even though I'm going to guess probably not. Looking here at the straddle where it went out at about 70 cents or so. So for the half straddle, so I got about 30 cents of juice in there. So I'll be figuring about a 40-odd cent move out here. Not exactly the most scintillating of names. I have a few others like Micron and Nike you may want to pay attention to as well coming up on Thursday. So earnings is mostly done, but there are some scatines, as my family would say, rolling in on the tail end here. Aside from those earnings scatines, Uncle Mike, we'll start with you. What are you keeping an eye on for the rest of this week, sir?
Well, Scotteens has definitely got my eye now. You say it in such an exciting way, but just watching the numbers as always. Want to see if we get another 12 points in the S&P tomorrow. On Tuesday we have new all-time highs, and I might get a chance to say what I love saying on the show in terms of never has there ever been I'm not going to say it, but I'm excited. I hope I get to say it this Thursday.
Well, there you go. We'll stay tuned for that as well. And before we go, Mr. Rock Lobster, what are you watching for the rest of this week, sir?
I am watching June 30th again is the Greek default date, even though right now everybody seems to have really good feelings about Greece. And really that's about it. I mean, we're looking for near new low, near-term lows for Treasury bonds, gold, all that kind of risk off type of stuff is, it's really starting, the fear is starting to go away. So I'm interested to see if we continue to get that low. Volatility is getting low. And there's also, there's some takeover action in the oil and gas space again. So I think the action will be in the names, and the broader index feels like broader indexes, and even the big vol index, everything feels like it's just, it's kind of stuck a little bit, and the individual names will be where all the action is.
We shall see indeed if that big tasty euro delivers some more tasty goodness for us before the end of the week. But unfortunately, that's all the time we have for the Around the Block segments. Also, all the time we have for this episode of the Option Block. But before we go, as always, let's peer behind the curtain with some of our compatriots here on the old All-Star panel. See what they have cooking up behind said curtain that may interest you. Starting with you, Uncle Mike Tusaw. What's cooking up behind the RCM curtain, sir?
Lots of things cooking. If you guys are interested in trading through RCM, if you are a self-directed trader, we have specific relationships with which we can advise you and help you and give you some possible money savings through TD Ameritrade and Interactive Brokers. Give us a call. Would love to work with you in one way, shape, or form. 312-212-3531, or send me an email at mtusaw@rcmfs.com.
All right, and Mr. Rock Lobster, take us home. What is coming down the pike in the land of the pit?
We have a free time spread class on July 7th, and if you like that class, we will have a 3-hour webinar. It's going to cost you money, but like with all of our webinars, most people tell us they learn enough in the webinar to easily pay for whatever the cost is. So that is what we have cooking for the month of July. So that's all coming up.
All right. Check out optionpit.com to learn more. And on behalf of the Rock Lobster and Uncle Mike, I want to thank all of you in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions that spur such great conversations. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.